Welcome back to the ETF Inspector. It's Sunday, May 18th, and this will be the week look-ahead video for May 19th through May 23rd for the YieldMax fund ULTY, which is their Ultra Option Income Strategy ETF. Also at the end, we'll go into an update on my trades. Trades performed this past week, and just looking ahead at everything, and we'll end with the corny dad joke of the day. Getting real close to 300 subscribers. Thank you, everybody. All right, let's get started. All right, as far as our holdings are concerned, we're somewhere around 27 different stocks within the fund. So we're just going to go through piece by piece and talk about where the stock is and how far out the option is sold on it, in the money, out of the money, so we have an idea of what kind of trading ranges we are looking for these stocks to trade within so that we can make the most money possible. Big picture, if the stock could go up to but not passing the option that's sold on it, then we can increase in market value and get to keep the premium. But that's a perfect world, and we know that doesn't always happen. That's why they have to actively manage these funds. So let's get started. All right, C3.ai, stock ticker AI. They closed at 24.16. They actually have their call sold out to not this Friday, but the following week. So this one, hopefully we won't talk about it much this week, but currently they have a call sold at 5.55% out of the money. To close it currently would be $467,000, but like we said, because of time decay, that could turn to zero if the stock does not go beyond the 25.50 strike price. For the most part, in every case, they own shares of each stock, and then for the amount of shares they have, they sell the maximum amount of contracts, option contracts that they can. There has been a slight change to their strategy. I picked it up while I was preparing for this video, didn't even notice it on the Friday recap. They've changed the strategy, and I'll point it out when we get there. But in general, they sell a call out of the money, and then they buy a put also out of the money to protect their shares in case the stock goes down. ASTS has two call strike prices at 28 and 29.50. Those are 5% and 10% out of the money. And again, we use color coding, not that it means anything, just so we know what we're looking at. If it's red, it means it's already in the money. And in the money sounds like a good thing, but it's not when you sold a call that you're going to have to buy back to close it. You want it out of the money, so it is cheap to buy back. So we use red for in the money, yellow for, call it like getting close, less than 5%, and then green for 5% or further out of the money. But if you've been watching these stocks lately, they move 10, 20% in a day sometimes, so there is no such thing as a safe zone, but we had to pick some kind of number for our colors. I'm not going to go over the protective puts that get sold. They're basically insurance policies. Okay, Webull, ticker BULL, is at 12.41 with strike of 14.50 sold for the calls, 4,000 contracts. They are 16.84% out of the money, out till next Friday. Well, this coming Friday. Kava Group, 96.81 is the current price. $100 is the strike price on the calls. They are 3.3% out of the money, so we're looking for them to stay below 100. Coinbase is at $266.46. Their calls are sold at $280. 5%, just over 5% out of the money. CoreWeave, out till May 23rd, so I'll try to just point out the ones that aren't May 23rd. There's only a couple that are May 30th. They have calls at 88 and 90 that are sold. That's, you can tell by the negative next to the amount of contracts. That means when they sold, 88 strike price calls. They didn't have them to sell, so when you sell, you go negative, and now you have to get back to zero, so you're going to have to buy them to close unless you were going to let them expire, but they don't let them expire in this fund. These are 9.5 and 12% out of the money, in the green right now. All right, Carvana, they switched up their strategy. My thought process is that this one's just been blowing through their calls too many times. They're losing money too many times. So instead of assuming that this stock is going to not go up beyond their calls, they've switched to a more bullish position. So they're selling puts. It's a put spread. So they're selling below the stock price, and as long as the stock goes up or doesn't come down, then they're going to plan on making their money that way. So that's one of the ones where they changed up their strategy. So they're at 302.50, which is actually 0.87% in the money with a stock price of 299.89. So they actually think this stock is going to move up. Well, and they're hoping they're putting their money where their mouth is. First Solar, back to the regular strategy. 195 is the strike price on 450 contracts, and 178 is the current price. So those are 9.27% out of the money. Hims and Hers, a single strike price at 67 on their calls, 2,000 of them. 64.65 is the current price, and these are 3.63% out of the money. Robinhood's another one. Seems they just are assuming that these stocks are going to keep going up because they are selling put spreads instead. You can see both options are puts, not a call and a put. So this is a spread, and they sell the one closer to the money to collect more premium. Then they buy the one further out of the money. One, it's cheaper to buy, and then two, it's to protect in case the stock were to drop, so you don't just continue to lose the farther it drops. Once it got to 58, you're at your maximum. So the most they can lose is $4 per share per contract. All right, IONQ, 35.50 is the single call strike price. It's currently at basically 34.99. So those are only 1.46% out of the money. Not safe by any means. Mara Holdings is at 16.21. They've got a call sold at $17.50. Those are almost 8% out of the money. Looking good. MicroStrategy kind of combined both strategies, right? The first two is the standard collar, sell a call, buy a put. Right, they've got their call sold 1.3% out of the money at $4.05, while the stock is trading at $399.80. Well, that's where it closed on Friday. And then they also employed the put spread. So they've got a put sold at $400 and another one bought at $375, and that put is 0.05% in the money. So for them to be doing that, they actually think this stock is going up. So for some reason, they're betting that it goes above 400 and yet stays below 405. That's a pretty tight trading range. Okay, Nvidia, 144 is their call strike price. Stock's at 135.40, and it's 6.35% out of the money. Oklo calls at 42.50. The stock's at 37.72. Those are 12.67%. We like double digits. Obviously, you don't get as much money because you sold further out of the money, but maybe we could get some wins. Palantir, similar to MicroStrategy, they're trying both options, both strategies, we'll say. So they have calls sold at 133 and 135. They're 2.69 and 4.23% out of the money. They protected all of them. You can see 620 and 100 contracts for a total of 720. They protected them all with the same price put of 720, of 110. And then they did the put spread, the bull put spread, or a credit spread, with 129 being their sold put. So we want it to trade above 129 and below 133 for them to make the maximum money possible. Reddit has a 121 as the call strike price. 113.23 is the current. Those are 6.86% out of the money. Rigetti is at 13 for their call strike price. 11.85 is the current price. Those are 9.7% out of the money. RH calls sold at 230 with a current stock price of 210. Those are 9.5% out of the money. SMCI, let me back up just a second. I did, yep. NVIDIA's calls are out to the 30th, so we most likely, unless something drastic happens, won't be talking about them again this week. Okay, SMCI, $50 call strike price. 46 is the current price. They're 8.34% out of the money. Snowflake's got calls at 182.50. The stock is currently at 183.08. Oh no, you know what? These didn't update for some reason. That's actually what the holdings were showing. So we're looking for that update. Let me just see if nope, I don't. Not sure why they didn't update. One more check. Hold on. One more check. So I think, even though I say they don't do that in this one, it looks like they allowed the Snowflake options to expire rather than rolling them at the end of the week. So they let those expire. So we are going to see them most likely make these trades on Monday morning, selling options for Snowflake for this week. All right, TNA, the triple leverage daily small cap, they have 29.50. Oh no, I'm sorry, they switched to the put spread option, so they got tired of this one going up through their calls sold, so they've decided to sell puts and hope it doesn't go down through them. So 31, we want this. Well, that's a fund too, fund within a fund. We want that to trade above 31. It's currently 1.4% out of the money, so as long as it stays that way, we'll be good. It's at 31.44. TQQQ, another triple leveraged fund, same thing. They went with the put spread as well. So 72 is the price we are looking for it to stay above. It's currently at 71.45, so we are starting out with them in the money, 0.77%. So these two need to go up just to get out of trouble right from the start. No, I'm sorry. This one was out of the money. Don't listen to me. Tesla, back to the standard strategy. 360 is the call strike price. It's currently at 349.98. Those are 2.86% out of the money. Upstart did the put spread as well. So 48 is where we're looking to stay above, with the stock at 48.08. Those are 0.17% out of the money. Vertiv Holdings, also the put spread option, 105 is where we're looking for it to trade above, and it is at 106.04, which is 0.98% out of the money. And finally, Vistra Corp, again, the put option spread, 157.50 is where we're looking for that to stay above. It's currently at 156.62, so these are 0.56% in the money. All right. There's currently 47,400,000 outstanding shares. These are now correct and updated. If you watch the other videos, they can never be at the end of the same day for all these numbers to populate. So everything is true now, because now we've had a couple days for everything to settle over the weekend. So the NAV, basically the amount of money tied up in everything within the fund, 297 million divided by the shares, means it's worth 627, and it ended the day trading at 629. So it always trades within a couple pennies. All right, we don't need to talk about their trades because we talked about them on Friday. So now you're looking for an estimate, and I'll tell you right off the bat, it's pretty hard to come up with a realistic estimate right now. So if we look at how they did last week, just for the income side of it, right, because it is a income strategy fund, they lost $11.5 million on their trades. But that is only because the stocks went up so much. How much did they go up? They went up $49 million in value. So they lost $11.5 million on trades, and they gained $49.1 million in value. So what are we going to do with that? Well, if they were paying out just solely based on income, well, we wouldn't get a distribution. We wouldn't get a dividend this week. But we know that's not how they do things, because we just saw last week when they lost money, and they paid, I believe it was 10.59 cents per share. If we combine these two, the 49 million and the loss of 11 million, and divided it out by the shares, it'd be 79 cents. That's also not happening, so don't think that my estimate is that. It's getting hard to tell what they're going to do. I think they're trying to kind of just stick with a consistent number, right? Because although they went up in value 49 million, they didn't make 49 million. They would have had to sell all the shares to make 49 million, and we know that they didn't do that. So what it seems like is they're liking to try and stick right in around this range of 80 to 100% annualized yield payout. So if we just did the IV, we took the 30-day IV, multiplied it by the stock price, and divided it out by 52 weeks, that comes out to 3.3 cents. Again, I don't think they're paying that low. So what they've shown us in past weeks, even when they don't make enough to pay a 10, 11 cent dividend, they're paying it anyway. So that's why my guess is going to be 10 cents right now. I'm going to say it's got the potential to be up, since they made so much more in share value increase, whereas on the week before it ended up being around $1 or $2 million. The combination of these two was a positive, like $1 or $2 million. Now the combination between these two is tens of millions. So maybe we could go high, but they didn't actually make this money to pay it out, so I don't think they're going to. So I think we're going to get in that 10-cent range, like we've been getting the last couple of weeks. Okay, all right, we're done with the week look ahead. Let's go into how I did this week, or what I did this week. And if you're not interested in that, you just wanted to hear that, thanks for tuning in, and I'll be talking to you after trades are finished on Monday. So thanks for watching. But if you're interested in to see what I'm doing, I'll try to get through it pretty quick. First part, I'm kind of excited about this. A couple different things. So I got out of USOY. I've been in it for a long time. That's actually not it. I didn't stopped updating because I sold the shares. So I sold my shares around $55 a share. The reason being, I'm looking for a chance to get into Pallady, PLTY. But they're sitting way too high right now. I think they're getting ready to pay a huge distribution, and that'll drop their price on that day, and that'll probably be when I try to get in. I also sold my YMAG shares. These are YieldMax Mag 7 funds, and swapped them out for YMax, which is, if you watch my video on YMAG and YMax, it kind of describes, this just holds all of the other YMax individual income option funds. So this one obviously has got the potential to make more premium, because the Mag 7's so big, they're not anywhere near as volatile in general as all these other ones that they cover, that we see swinging 10 and 20% a day. So that's why they get more premium. So I sold these in the $15, $16 range, bought these in the $13 range, and basically collected the same distribution. These are where I keep these over here. So I grade these out because I'm no longer going to get distributions from YMAG, and I picked up my first YMax distribution weekly, and it was $38.20. And then I got my ULTY distribution, which was $31.77. That's from 300 shares. This is from 200 shares. And then the part I'm excited about, I was upset. I missed last month's MSTY distribution because, as like a knucklehead, I sold a covered call on it, and they got assigned when the fund went up so much. So I didn't get them there, but then I sold a cash secured put on Misty, trying to get it back. So I I got paid $30, and that was an option to. It was a put option at this price of 23. So since I sold at 23, then I didn't want to pay any more than 23, even though Misty went up to like 25. So I sold a strike, and a put with a strike of 23. Got paid $30 for it, and Misty closed on Friday at 22.89, so 11 cents below it, and I got paid 30. So I made out there, and I'm going to be back in the Misty Mafia, as Retire on Dividends calls it. So we love that one, right? Because you're getting $1.50, $2 plus a month per share. Okay, that's for those. Then the other one, my favorite one to trade is IONQ. It also happens to be held within ULTY. I grayed out the other ones. I got tons of information. I've been trading them for a little while now. But what I did was closed out my, they were expiring. Hold on. Yep, so they expired on Friday, $30.50. IONQ is obviously well above that. It's around like 34 or 35. So I'm in trouble. I'm looking at losing these shares as well, but I'm going to just keep on collecting money while I can. So I ended up closing those out on Thursday. Had to pay $3.67 a share, and I rolled them up to the following Friday. Increased what I'm going to get for them by 50 cents. So I went from $30.50 to $31 and got $3.92 a share. So overall, it was a $25 increase, plus I'll be able to sell the shares for an extra 50 cents each. I won't bore you with all my other stuff over here. This just kind of keeps track of each individual trade's annualized return on capital. So you see, you get huge numbers here: 158%, 467%. I ignore these, right? That's an actual option assignment, so I bought the shares, so it looks like I lost a ton of money, but I didn't lose a ton of money. I got shares, but some of them are bad. I don't know why. It's because this one's not populated. I'm not worried about working on that right now. So big picture, I have 200 shares with a cost basis of $5,500. So I have a cost average of $27.50 on these shares. So I'm sitting great. Even if I do get assigned, I'm getting $31 for them, and I'll make a profit. And then finally, I didn't make any trades, so we'll get through these real quick. I have 3 poor man's covered calls. If you're not familiar, that's where you buy a deep in the money call for a long term. Right, most of them I went out to 2027, but Intel I went out to 2026, and then from that, now you can sell calls off of that. Didn't do anything this week, so the only thing I'll say is the calls expire this Friday, so I will end up making a trade on them this Friday. APLD, same thing. Didn't do anything this week, but the call I have sold expires this Friday, so I will be trading it this week. And the last one, SoFi, is out a week further, so I most likely won't do anything with SoFi this week. All right, that's everything. So thanks again. Please like, subscribe, share, and check out each video I put out for you. All right, dad joke of the day. Why did the cross-eyed teacher get fired? Because he couldn't control his pupils. All right, thanks everybody. Have a nice rest of your weekend, and I hope you have a great week trading.